Hi guys, welcome back to the channel. So I don't know how many times this has also happened to you. Let's say you are in the market and you are looking for an opportunity, and probably you see this amazing opportunity. It's just an example. It's just a theoretical example, and you probably nailed it and you sold here, and you were smiling and you were happy, and you thought, let me just leave things and I'll be making lots of money. But lo and behold, price came back here and probably your stop loss was taken out. But you had made some money, but then again you gave the money back to the market. It happens all the time, which is why we are going to talk about my 5 top tips for trade management. You need to have a plan about managing your trades in the market, because it's going to make the difference between you winning in the market and you losing, as well as your overall profitability in the market. So every trader needs to have a plan for trade management. Most of the time people are emphasizing on getting ideas for entries. Always everyone is wanting to have an idea of how are they going to enter, but nobody really knows what to do when they enter the market. Everyone is looking for a good strategy for entering the market, but then after you enter the market, what do? You need to have a plan for trade management. So what are my 5 tips for trade management? By the way, if you are new on this channel, please consider subscribing so that you don't miss future videos. Like the video or dislike it, whatever you choose. Otherwise, everything else, including the blogger that I use, many people always ask me about that. The link is in the description box below. So the first thing that you want to do, what I do when I'm managing my trades, is you need to always be aware of fundamentals. You must always be aware of fundamentals. Why should you be aware of fundamentals for that day? That's why I always have this information on my chart here. Why do you need to always be aware of fundamentals? Because fundamentals can easily turn your profitable position into a negative one. So what you want to do is, ahead of major news, if you are in a trade and that trade is making money, and there is some high impact news that is coming along, what you want to do is definitely to protect yourself, protect that position, either by taking some money out of that position or moving your stop loss to protect that position. So whatever outcome comes out of those fundamental news, at least you are not giving back money to the market. So that's one thing. Always be aware of any fundamental news that might affect your position, so that you don't lose money, the money that you have already made. Okay. Then number 2, I think this is a classic one when it comes to trade management or managing trades. You know, people usually, when you are losing money and you still have faith in that position, people would start adding onto that losing position. Never add to a losing position. Never add to a losing position. That's a very important point. Many people make that mistake. They have faith in that particular position or that entry and stuff. So usually, if it goes into drawdown and it starts going against them, there is always a temptation to what? To add to that position, believing and thinking and praying that it's eventually going to go my way. So when it goes my way, I will then have 2 or 3 positions what going my way. It usually never happens. Sometimes it can go all the way against you, and with your added positions, you you quickly run out of margin, and you get a margin call and you blow your account. So trade management point number 2: never try to add to losing positions. If it's a loser, cut your losses and move on and find another opportunity. There are always hundreds of opportunities coming in the market. So don't fret about that one losing position. Number 3, what you also want to do is to always monitor price action at higher time frames. Always monitor price action at higher time frames. I know people love to trade on the 15-minute time frame. Many people love to trade at the 15-minute time frame. Some people even go down to the minute or to the 5-minute. Uh, some people rarely, I've seen people rarely trading on the 30-minute, but it's usually 15-minute or lower, or 1 minute or 1 hour, 4 hours, something like that. What you want to do if you are trading the 15-minute time frame, whatever you are trading on the 15-minute time frame, still have an idea of the candles that are forming on, say, the 4 hourly, or if you want to go crazy, the daily. Whilst you're trading on the 15-minute time frame, understand what's happening price action wise, what on the daily or the 4 hourly or the 1 hour, whatever you choose. So you basically can trade in the direction of what the higher time frames, or if the higher time frames start moving the opposite way, you then need to protect yourself if you are trading with the lower time frames, because you need to be trading with the higher time frames. The higher time frames determine the direction of the move. So you cannot say you are going to be buying on a 15-minute time frame and you expect to hold that buy trade for a very long time when the daily and the 4 hourly are actually selling. And that is simply doesn't make sense. So always monitor price action at the higher time frames if you are trading in these lower time frames. Okay. Another point when it comes to trade management, this is opposite to what I said previously. Obviously, what you want to do is to let your winners run. Many people make that mistake, or they actually make they they do the opposite. Let me put it that way. They do the opposite thing. Many people are okay with letting their losers run for a very long time, but they are not confident or they are not comfortable enough to let their winning trades run for a very long time. So what they do is, the moment they see a small profit, they close the trade. But if that same trade starts losing money, they are happy to hold it for a very long time. That's not how it should be done. What you want to do is cut your losses early, and that trade that's making you money, just let it go, leave it. Move your stop loss to break even or trail that position, but let it to run its full course. The point that I always try to tell people is, before you make your entry, is to always try to have an idea of when you are going to enter the market and where you are going to go out of the market on that entry. So it helps you to be confident to let that trade run its course when it's making you profit, and it also gives you the confidence to cut it early if it happens to be working against you. So always let your winners run. So those are some of the points that I thought I should share with you guys regarding trade management. Always try to protect your profits, especially when there's high impact news coming along. You want to protect your position somehow, so that you don't give back the money that you'd have made in the market back to the market. Then never add to a losing position. A big no-no. Don't be tempted to want to add to a losing position. What you probably want to do is close the trade and wait for an opportunity to enter again, but don't add to a losing position. That is a recipe for disaster. Then you also want to understand what's happening on higher time frames when you are trading the lower time frames. Many people are just trading the lower time frames and they are not even aware of what's happening on the higher time frames, and they are surprised when they get taken out of the market or their position because they were not paying attention to what was happening on the higher time frames. Then obviously we said don't do like what many people do. Cut your losses early, but let your winners run. Subscribe if you're not yet subscribed. Like the video, subscribe. I will see you in the next video. Bye.